We are live from Bloomberg's world headquarters in New York. I'm Sonali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
And Bitcoin has been getting a bit of a bounce of late. And this hour, we're going to speak with Crucible Capital's Meltem Demirors about sentiment around both tokens and miners.
And as Congress mulls legislation to clarify rules around stablecoins, President Trump's World Liberty Financial plans to offer its own dollar tracking stablecoin. We speak about the latest with Circle's global head of policy.
And an exclusive with Michael Sonnenshein from Securitize, and we're going to discuss the possibilities around tokenization and just how far crypto has come since his time at Grayscale.
All that and more coming up over the next half hour on Bloomberg Crypto. First, though, a check of the market in Bitcoin. Well, it's had a great week, up 7% over the last 7 days. Yesterday, it actually reached a high of more than $88,700. Its highest in about 2 weeks. A lot of that buying came yesterday, this amid this broad-based risk rally based on signs of more targeted U.S. tariffs. We saw pretty much everything higher yesterday. Still, if we zoom out a little bit, Bitcoin down around 15% from that all-time high that was reached back on January 20th. It was the day that Donald Trump was inaugurated. Sonali?
Now, when it comes to Bitcoin, you have to look beyond it and see where the negative sentiment is otherwise, because of course, Bitcoin is the king in the room in so many ways. I'm looking at Ether ETF flows particularly because there has been a steady drip of outflows lately. The group of 9 ETFs have shed about $415 million across 13 straight days of net outflows, if you take a look here. I would also say one of the reasons this matters is the sentiment. The flows are all tracking into highly anticipated launches of new ETFs of products and tokens outside of Bitcoin and Ethereum.
Yeah, we'll see how that ends up looking a little later today if that sentiment continues. One product, though, not seeing outflows lately is BlackRock's tokenized fund BUIDL. The fund, which is exclusively on Securitize, has more than $1.7 billion in assets under management. Joining us for an exclusive conversation is Securitize COO Michael Sonnenshein. Michael, good to see you. Welcome back to Bloomberg Crypto. How are you?
I'm great. Thanks for having me.
Yeah, thanks for joining us. Hey, we're going to talk about Securitize in just a minute. First, I do want to talk about this moment in crypto because it has been a while since we spoke. When you were at Grayscale, you led the battle to create a spot Bitcoin ETF. Fast forward to today, you've got those spot Bitcoin ETFs. You've got this new crypto-friendly administration, a potentially more crypto-friendly SEC. We'll see what happens later this week. What is the opportunity that you see at this moment?
I mean, it really is night and day, right? When I was last here a couple months ago speaking to you, I would say that as an industry, crypto was still operating here in the US under a regime of regulation by enforcement. By and large, I think the crypto ecosystem is breathing some sigh of relief that perhaps that has ended, right? We've seen a lot of lawsuits be dropped against crypto businesses. We've seen more businesses come to the US wanting to offer crypto products and services. We have a head of crypto at the White House. We have a crypto task force at the SEC that's meeting collaboratively with crypto businesses. And so to me, that combined with the executive branch of government that continues to come out publicly and say, we want to make the US a crypto hub, a Bitcoin hub of innovation, means that the opportunity around this asset class is going to be here in the US.
I think there's a pretty direct connection to be made here and what might be possible in terms of tokenization. Executive after executive that we speak to the idea of accredited investors and even a broader set to be able to have more access to companies or projects that are raising money in a tokenized manner. Private equity funds, venture capital funds. How big is that opportunity? How fast does it come?
It's coming very quickly. So at Securitize, we sit in a really interesting place. We are the largest tokenization platform out there. To date, we've brought almost $2.5 billion worth of assets, real-world assets, onto public blockchains. So we sit between asset issuers like BlackRock and Apollo, KKR, Hamilton Lane, and public blockchains, Polygon, Ethereum, Avalanche, et cetera. And so for those that want to bring their investment offerings on-chain in a compliant, secure way, they're often coming to Securitize. Now, the real question is why, right? For a lot of folks, it could be democratizing access to the investments, like you mentioned private credit, something that historically has only been available to a small subset of investors. But I think we share a burden in the tokenization space that we want to make the investor experience objectively better. So that could be daily dividends. It could be instant liquidity. It could be things that investors aren't getting in their traditional counterparts that only this technology allows it to be unlocked.
Your partner really over here, BlackRock, when it comes to this tokenized Treasury fund, BlackRock CEO Larry Fink at Davos said this, it caught a lot of attention. My God, if we can tokenize bonds and stocks tomorrow, it would democratize investing in all ways we can't imagine. And I think that just shows you part of what he's seeing down the road.
Sure.
But let's just start with what you have right now. I mean, the idea of tokenized treasuries, why? Why buy into this fund relative to a money market fund or even a stable coin? There's a spectrum of investments to choose from.
Sure. So there's a couple of dimensions to look at this. So if you take a money market fund today, for instance, investors may be only getting their dividends monthly. Investors have to submit an order to buy or sell the money market fund or treasury fund by a certain cutoff time each day. The fund may not be open, obviously usually on weekends, et cetera. By contrast, you look at the product that we have with BlackRock BUIDL, there's 24/7, 365 liquidity, daily dividend accruals, instant subscriptions and redemptions. You know, this is objectively a better investor experience, and we're starting to see people really think about money market funds in a different way, using it as collateral, things that they just don't typically think about when they think about the traditional counterpart.
But how does that open it up to more people? How does it democratize this? Because it's pretty easy to use any sort of app, be it Robinhood, Schwab, Fidelity, and more, and go and buy any of these assets that you're talking about, save for venture capital.
So I think in the terms of a tokenized treasury or money market fund, it's actually about connecting that collateral in a way that people aren't typically used to using it. So today, I think a lot of investors' mindsets may be, I have some spare cash, I'm going to make it interest bearing by putting it into a money market fund or put it into treasuries. But today, those assets and those products aren't connected or utilized in the world of DeFi, for example. Whereas if you're doing this on chain, it allows you to use that collateral to post on an exchange, to post as collateral with an OTC desk, or even link it to the world of DeFi.
So how far does this go in your view? What ultimately gets tokenized? What do you want to get tokenized?
Well, it's a small but growing market, right? The world of RWAs has more than doubled in the last year, and within that, tokenized treasuries have actually expanded over 500%. We recently tokenized public equity, New York stock listed company Exodus. So we're starting to see movement beyond tokenized treasuries, movement beyond tokenized money market funds into things like public equities. But again, it's small, and a lot of that momentum I think will continue to carry throughout this year.
I also want to just take another big picture view for a moment, because you have the confirmation hearing for the incoming SEC chair, Paul Atkins, this week. From the seat that you're in, what are you looking for in terms of how he might lead the SEC?
So again, it seems like gone are the days of regulation by enforcement. And so I think as long as we are continuing to proactively work as an industry with our regulators, we are unlocking new use cases around crypto every single day. And so it's really a burden that we have to share as an industry to continue to educate them, right? If we're going to continue to expand access to RWAs, if we're going to revisit things like the accredited investor definition, all of these are the types of engagements that we certainly want to have with our regulators.
Do you ever get a little concerned that this administration is too close to crypto, given World Liberty Financial, their entry into stablecoins announced today, and then of course meme coins as well?
I wouldn't say that's a concern. I think it's certainly an area that has been nice and welcomed by both myself, my peers, and peer businesses to see that level of collaboration.
All right, Michael Sonnenshein of Securitize. Good to see you.
Good to see you.
Welcome
Thanks for
back
having
to
me.
Bloomberg. Hey, let's take a look at the market as oil is falling a bit as Ukraine President Volodymyr Zelensky and the Kremlin have confirmed a partial ceasefire. The U.S. said earlier Russia and Ukraine have agreed to a truce in the Black Sea. For more, check out, of course, everything on Bloomberg.com and on the Bloomberg terminal. Much more Bloomberg Crypto coming up in just a couple of minutes. This is Bloomberg.
Right now, Congress, it seems, is more focused on getting stablecoin legislation passed. That went for markup last week, and I think you'll see that potentially in front of the president in weeks. The other piece of legislation I think will move quickly after that is kind of the market structure bill. Last summer, something called FIT 21 passed the House, did not get through the Senate. I think that a market structure bill like FIT 21 will come before Congress, hopefully before the summer recess.
That was Ripple CEO Brad Garlinghouse speaking with me last week. And today, President Donald Trump crypto project World Liberty Financial says it plans to launch a stablecoin that is redeemable one-for-one with the dollar. And as you had heard, this comes at the same time that Congress weighs in on stablecoin legislation. Bloomberg Intelligence senior government analyst Nathan Dean is here with details and analysis. Nathan, I think it's fair to ask, how unusual is it to see Congress passing legislation or on the brink of passing legislation at the same time that the president has a business venture tied to benefiting from that legislation?
Well, it's very unusual, but I think it's more par for the course these days with the Trump administration. And I think what is happening here at the moment is the Trump administration is preparing for this bill to pass. So this bill is currently going through the Senate. It passed the Senate Banking Committee 18-6. I did a vote count right before I came on the air. And I think this does get the 60 votes it needs in the Senate and overcomes any potential filibuster. Now, I think this bill will pass sometime between May and July. And what it does is it sets up stablecoin issuers to be regulated either by the feds or by the state authorities and requires them to have 100% high quality liquid assets. But most importantly, it brings regulatory clarity and loosens up enforcement risk so that these issuers and these tokens can then operate in the United States going forward.
Nathan, what do you see as the big difference when this bill becomes law versus before it becomes law, if it indeed does become law?
Well, for the issuers in particular, it's going to mean much more in terms of costs. Probably think about tens of millions of dollars in terms of compliance costs for these issuers. Now, the issuers are going to be happy to pay it. It means that they are not going to be brought up on enforcement violations or anything like that because, even though the enforcement risk apparatus is much lowered today because of the changing guard at the SEC, unless that law changes, nothing prohibits a future SEC from coming back and saying, hey, you're operating against the law. Here's an enforcement action for your trouble. So I think the issuers are going to pay more money, but it also brings more acceptance to the idea of stablecoins in the United States. The one area that I think is not going to be happy with this is community banks. Because if you think about it, like, where are you going to get the money for stablecoins? If I decide to put more money into stablecoins, it's most likely going to come out of deposits. So that could come up as an issue as we see this debate go into the bigger, broader Senate, but I don't think that's going to be an issue that stops this bill from passing.
Nathan Dean of Bloomberg Intelligence down there in Washington, D.C. Nathan, always appreciate you joining us. Let's bring in Circle's head of global public policy, Dante Disparte, for more on this. Dante, I do want to start with what we spoke about with Nathan just now, the news that the Trump crypto project, World Liberty Financial, is getting into stablecoins with the plan to launch 100% backed by short-term treasuries, dollar deposits, and other cash equivalents. What do you think about this project? Certainly appears to be a competitor to USDC.
Well, I think one of the interesting dimensions, of course, of impending legal and regulatory clarity is that this market would enjoy a lot of competition. At some point in time, obviously, our business model at Circle, in some respects, has defined the basis of what is the legal standard emerging here in the United States and certainly the regulatory standard around the world. But the movement of money and the movement of dollars is trillions of dollars of economic activity. It's one of these domains that would welcome competition. And I think it should be very broadly encouraging that World Liberty Financial joins our ranks and other companies would also participate broadly in this market.
But I would think there's competition and there's other companies, and then there's competition by companies that are closely associated with the President of the United States. And that could be a little different. Is it different?
Well, look, digital dollars in the broadest sense should enjoy and be digital representations of the full faith and credit of not only the U.S. economy, but trust in the banking infrastructure underpinning this market segment. And for the better part of the last many years, crypto policy in the United States has been defined by a policy of gradualism. And so one of the benefits that this White House has brought to bear, not only with naming crypto czars, but also in sort of mobilizing Congress and the Senate, is a world in which we have legal and regulatory clarity upon us. The Genius Act and the markup of the Genius Act enjoyed bipartisan support. Members of the Senator Mark Warner, as just one among many, switched sides and voted in favor of this markup. And I think the markup that we'll all watch next week on April 2nd will also, I think, continue to show Democratic support growing for a principled set of regulations here.
You know, one thing that is striking me is now that we are so close, we are oh so close to more clarity around the stablecoin industry. Even in the lead up, you have seen a lot of companies adopt pretty interesting use cases around them. For example, Robinhood, using it to facilitate 24 hours trading here. The way that even Coinbase has molded their business even more to incorporate the stablecoin world. Ultimately, what are the types of businesses that you see popping up around using stablecoin that will potentially start to really set off after we have that regulatory clarity?
Well, Sonali, it's a great question. I mean, one of the reasons we have always designed USDC and Circle's technology choices to be open source and to promote this developer-first world is that the key features of stablecoins are composability and programmability. For example, USDC is broadly accepted all over the world, increasingly as legal tender, for example, or as legal electronic money in all of Europe. Just Japan, yesterday we announced expansion of USDC access into Japan, Canada similarly. And so on top of that legal and regulatory clarity, and where you have technological designs that support innovation and open use of digital dollars like USDC, you then now see major companies. Nubank in Brazil has made USDC available to its more than 114 million end users. Some of the use cases that you described are core features of stablecoins like USDC. And so we're just continuously encouraged by the policy developments around the world, the policy developments in Washington, D.C., and our hope is that we move from policy signals to actual law. That's the real unlock I think a lot of the sector has been waiting for. And then once stablecoin laws are passed, you could envision moving on to crypto market structure as well.
Dante, we are looking forward to talking to you after we see all of this pass. It's looking like it's headed in that direction. That is Circle's Dante Disparte. And then coming up, we're going to speak with Meltem Demirors. She's going to talk to us about the sentiment, the trading, the Bitcoin volumes, which are lower than they were pre-election. Despite all of the confidence, we're going to see what she's thinking next. This is Bloomberg. Take a quick check-in here on Bitcoin, Ether, Strategy, and Coinbase, because they are indeed mostly down on the day, and I think it tells you where things have been. We are at 87,000, almost 88,000 on Bitcoin, but pretty much flat now. But you do see bigger drops in Ethereum by the tune of 0.8% right now. And of course, when sentiment is sour in the crypto industry, you do see the likes of Strategy. It's roughly flat, but Coinbase is down another 1% today. We're going to talk about all of this sluggish trading. We're joined now by Crucible Capital general partner Meltem Demirors. You know, it's interesting because you have not seen by any measure the type of excitement in the trading of crypto assets as you have in the rhetoric around crypto in the Trump administration. Why?
It's a tale of two cities. Sentiment is positive. You see a lot of enthusiasm about the Trump administration policy direction. But if we look at markets, volumes are abysmal. We're back to trading levels we saw pre-election. And if we look at price activity, I think macro's bad. Tariffs are pending. Consumer sentiment is bad. And we've sort of exhausted all catalysts. Where's the bid going to come from? I think there's a lot of questions around who's buying.
Who's buying and why are they buying? Because over time, there have been so many macro stories. You're worried about inflation, buy Bitcoin. That's not happening right now.
Yep.
You're worried about the macro, maybe this could be a hedge across what's going on in the world. That's clearly not the case right now. So what's the story?
Okay, so let's talk about 2024, right? So in 2024, we had two big catalysts. We had ETF buyers. If we look at the ETF buyers based on 13F filings from December, majority of those are firms that are farming the basis trade, right? They're not long-term holders. It's not mom and pop going out and buying in their brokerage account.
Explain how that works.
Okay, so basically how it works is people are buying the ETF and then shorting Bitcoin.
Okay.
So they're capturing a basis spread. If we look at MicroStrategy, convert arbitrage, right? It's convert arbitrage, great strategy. MicroStrategy and IBIT have been propping up that complex. They've been the predominant buyers, and they now hold 6% of the Bitcoin supply. So a lot of growing concerns around a potential black swan if that trade unwinds.
Okay, but we're also seeing some some weird stuff happen here.
Yep.
Like yesterday,
It's
during the
crypto.
risk-on rally, we saw altcoins outperform sort of the, stalwarts, the Bitcoins. Why is that? What does that signal for you?
I think there's some relief rallies happening. I think people are looking for signal. There's been a lot of noise around, wait for a dip to accumulate positions. Let's just zoom out. If we look at the last 4 years of crypto, if we take out Bitcoin and Ether, no change in market cap of that long tail of crypto and no change in trading volume. It's been flat. Just the names are rotating, so it's a game of musical chairs.
Are you concerned at all about the Trump administration being too close to crypto? He's out there on social media talking about his own Trump meme coin that happened in recent days. It's not necessarily typical for a U.S. president to do. You got World Liberty Financial out. We got Bloomberg News with a story today.
Is it competing?
Talking about a stable coin.
It's not just Trump, right? Howard Lutnick, Cantor Fitzgerald, is the custodian for the money market funds that are backing Tether.
Does it concern you?
It doesn't concern me. I think it is just the part of the cycle we're in. I think the question is this value accretive? What we're doing, what Liberty Financial did, what the Trump meme coin did, Tether, Circle, we're taking money out of the crypto ecosystem. We're taking liquidity out of the crypto ecosystem, putting it into the banking sector or putting it into the pockets of the creators of these coins. So is that value accretive to boosting volume in Bitcoin and the broader crypto complex? Not necessarily, but I'm so optimistic. It's a Bitcoin story. Bitcoin dominance at a 4-year high, 70%. It's a Bitcoin story.
But I want to go back to what you were saying before about perhaps, I like to think about this as hidden leverage. How much is there? And if something were to go wrong, you mentioned worries about a black swan event, how does that bubble pop?
I think the question is, where are sellers versus buyers, right? I'm a simple girl. Every time I talk to you, I say it's all about the flows. If we look at the flow story, over the last 5 weeks, we saw outflows. Last week was the first week we saw inflows into the ETFs, around 750 million, so not a lot. So it's a question of inflows and outflows. Right now, a lot of outflows on the horizon. We've got the MicroStrategy convert arbitrage strategy, and then we've got people farming basis on the ETF. We've also got Mt. Gox starting to distribute coins. They just moved $1 billion of coins. Those distributions are going to start happening. FTX is distributing coins. So we've got potential net sellers and distributions that may become net sellers. Where are the inflows coming from? Who else is left to buy, right? The strategic reserve, I think, was the last big catalyst. Ambassador came out and said no new coins. It's a stockpile now. Tax neutral buying, though. So I'd love to see how that's going to work.
Meltem, we love having you here on set. That was a very full picture on what to expect in terms of the supply picture driving the story here.
Crucible Capital general partner Meltem Demirors here in New York. That is going to do it for Bloomberg Crypto. Join us again next week for everything when it comes to crypto between now and then. Always check out CRYP Go on the Bloomberg terminal for the latest when it comes to the price action too. For Charlie Bosik, I'm Tim Stenovec. This is Bloomberg.